again, good afternoon, or to you, all my students. Okay, it's Mentorship with Don, exclusive training with Don. So now, I discovered that some of you are getting wrong. You're not really getting this aspect of a reversal candle very, very well. So I'm going to go deeper because you see, one of the reasons I need to go deeper is that candle does not lie. Price action does not lie. And I'm not saying these candles are 100% perfect. That every time you see them, and they're 100% perfect. But I tell you that most of the time, if you take your trade based on these reversal candles, you will make profit. You will make profit so much so that the only time you may be losing trade is maybe news comes to the market, or just very few times. Just very few times. So you can have profit most of the time. Most of the time. And that is what I wanted to pay attention to. So I said it earlier, and see, if you open your chart, anywhere you can find any of the reversal candles at any fucking time on the charts, you can find the reversal candlesticks. You can find it there. But we're not going to be taking trade based on just any reversal candlestick that you find on your chart. No, 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 we're not going to be taking just any trade just because, oh, you have seen a reversal candle and therefore you must enter a trade. No, no, not so. Not so. But where are these reversal candles formed? Where are they formed? Where are they found? Where are they formed? And I said, okay, reversal candlesticks are only relevant when they are formed on the area of interest. The area of interest. Only when you see the reversal candle form on the area of interest, that is when you should pay attention, that you should be taking trade. Because you see, the reversal candle can form anywhere, and it will not mean so much except they are formed on our area of interest. So the area of interest are the area that you have prepared down before price get to that place. Okay, you are expecting a reaction. You have interest at that particular spot in the market. You have interest at that particular price in the market, or that particular zone in the market, or that particular point price in the market. And what are the area of interest? Your area of interest are your trend line bounds. Your trend line bounds. Your area of interest are your trend line breakout points. Your trend line breakouts. Your area of interest are the trend line breakout and retest. Trend line breakout and retest. Your area of interest are your Fibonacci retracement, zones or level. That's your area of interest. Your area of interest is your support and resistance. Your area of interest are your demand and supply zone. That's your area of interest. So you don't just come on the chart and start looking for the reversal candle at any time. No. You have prepared down your area of interest. And so it's very, very important. So I said, before you start looking for reversal candlesticks, I'm writing this again. Sorry, I didn't save it the last time I corrected it. Okay. Before you start looking for reversal candlesticks, you should look for area of interest. Area of interest is sometimes I call it the dawn zones. The dawn zone. Dawn zones. That's where I make my money, bro. The dawn zone. Dawn zones. I'm telling you. The dawn zones. So reversal candles are only relevant when they are formed on the dawn zones. Okay, so now let's go deeper. So we said, okay, and they had the time frame, the more reliable the reversal candles are, no, blah, 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 that. But see, my point is not just it's not to revisit all that I've taught you before, but I just want to, you make an emphasis on an area where you are missing very important point. So say we have five types of five variation of doji. We have the common doji or the simple doji. We have the long-legged doji. We have the dragonfly doji. We have the four price. We have the gravestone. And and I gave you the diagram to all of them. I gave you the diagram to all of them. So you have the doji, you have the common doji, we have the long-legged, you have the gravestone. This is the 4 price, and this is the gravestone doji. I think some of you are missing out. Some of you are missing out this. You're missing out on this. You're missing out on this 4 price. And so I want us to now check our chart, and let me quickly explain to you what exactly I meant by this by area of interest. Let's say, for example, we are on GBP USD. For example, we traded this place last week, and last week. So we have so let's say I have my area of interest. Let's look at it from here. So let's say if this is my point one, if this is my point one, I have my one here as a trend line bounce now, and I have my point two here. I have my point two here. Now look at the touch. The third touch is a doji. The third touch is a doji. So at this point is my area of interest. Don't forget that I've already drawn the line from here to here where the price is here, when the price is still moving around here. When the price is still moving around here, I've already drawn the line. So my in the future, this is my area of interest. If anything along this trend line, if I see anything that will still push the price to the downside because the price is actually going down, price is going down. And so at that point now, I'm having a doji. I'm having a doji here. I'm having a long-legged doji. And this is telling me that this pullback is ending. And I told you the reversal candle is actually saying a pullback is ending or a total reversal to an opposite direction. So now it's selling. The price has been selling all the way from here. It will continue to sell. So I'm expecting a bounce. I'm expecting a bounce on this trend line. I'm expecting a bounce on this trend line. Now at my bounce down, I'm seeing a doji. And then another candle that confirms it. Do not tell me, oh, and I told you doji is neutral. Doji is a neutral point in the market. But then it calls for my attention. Doji sometimes requires another confirmation. Like the kind I'm going to be teaching you today, where today's class does not, it's a confirmation on its own. But doji is a neutral point. At that point, they said when everybody in the market, okay, so generally, look at it, generally, is the moment in the market where the bulls and the bear agree on the same price. So you will see the opening price and the closing price are the same, is the same. Or you will see the opening price and the closing price are the same. Both of them are just the same. They're the same. Okay? And so it's a time of indecision in the market. It's a time of indecision in the market. So like here now, the buyers are pulling it up, but the moment you see it, because you are expecting something, you're expecting a sell, so your eyes is telling. So if I were you, I either wait until this is confirmed, or I set my pending order, my sell stop at this spot, my sell spot below that candle. And in fact, that's exactly what I did last week. Set the pending order here, sell stop here, and then the price went in our favor, and then just very few pips, just very few pips there, just very few pips there. By how long it did that's about 27 pips, 27 pips. And then look at it again, another area of interest. It's touching again, it's touching again, and then at another touch here, I'm seeing another doji, another doji, this is now greystone doji. You can see how doji pack themselves into this place. I'm having a long-legged doji, I'm having a long-legged doji, and I'm having a gravestone doji. All of them are telling me to sell. When I first of all see this, oh, and attention is calling my attention that look, oh guy, this is going to go down. This is going to go down. Normally, I'm expecting it to go down because we are still selling. I'm expecting it to go down. We are still selling. And the moment I'm seeing this doji, it's telling me that look, I wait for another confirmation of a candle to close below this week, below the week of the doji, in the direction of I'm expecting the markets to go. So by the close of this candle, I'm going to take in a sell, or better still, I set a sell stop pending order around here below that thing, and then put my stop loss up here, and then just allow the market to go. And then see, and the market still came down, by how many pips was that this time around? It's about 33 pips, about 33, 33 pips thereabout. That the market, came down in 33 pips. And that's what I mean by the area of interest. So you can see that there's doji everywhere. I don't have interest in this doji. I don't have interest in this. So doji can form anywhere. I don't have interest in this doji. Doji can be formed anywhere. See this doji. I don't have interest. I don't have interest in this in this one. I don't have interest in even in this one. Okay, I don't have interest in many of those doji. Okay, except they form on my zone. Look at this particular doji now. It's forming on my zone. See this doji now. Almost close to my zone. Almost. You know. You can see here now. Gravestone doji. You see, you can see now. There's support here. The price given gap up here, it came down there. History is repeating itself. Now I'm seeing a great I'm seeing a doji here now. I'm seeing a doji here. The price came back up and went back. I came back to the same spot again, and then form another. This one is spinning top. Okay. It's also a reversal candle. Then the price went up a little again, came down, broke it a little, but yet it's going back again. I'm seeing another doji. It means that this is the first breakout of the support, a first breakout of the support. Okay, and then it's going back up. So it's not really about the reversal candle, it's about where they are formed. And look at something else again. Check this for me. Check this for me. Did you see this? Did you see this? There's a resistance here. Price came down, and then in the future, history repeat itself in the future? I'm seeing a gravestone doji here, a gravestone doji here, telling me the price is going to sell at this resistance, and the price is going to sell. And so I see doji. I wait for another candle to be formed. For example, I will be selling as a conservative trader. I'll be selling at the close of this candle. This close of this candle. Immediately this candle is formed, I make a sell. Or after this doji is formed, just come down a little bit, put a pending order, a sell pending order, and then you take your sell. And I see by how much price came down. See by how much this price came down. Price came down by 80 pips. By 80 pips. Price came down by 80 pips. So the interest is not just the candlestick, the interest is where the candlesticks are formed. I hope you understand that. So let's go back a little. I think there's some things I marked out um on the market in the past. There's some things I marked out that I want to show you. Okay. Now look at here now. Look at here. Price got to this place, it bounce up. Came back there, bounce up. Okay. Then I'm going to draw it to see if the same is going to happen in the future. This is this is this is a zone, support zone, and when support is broken, it becomes a resistance in the future. Now in the future, now I'm seeing doji here. Okay, did you see doji here? I'm seeing doji here. Based on this, support here has become resistant, and in the future will history repeat itself. I'm seeing doji here. When I see doji here, I'll wait for this confirmation candle to be formed, or I place my pending order a few pips below that doji candle in the direction that I'm expecting it to go, and then see by how many did the price go. If I put pending order like somewhere around here, look at it now. We have 82 pips. 82 pips. Same thing happened here. Price got to this place. Okay. Price had we had a little support here. We had a little support here. support, price got to this place, bounce up, got to again, bounce up a little. Then in the future, will this thing repeat itself? Will it repeat itself? Then in the future, I'm having doji here. At the end of the doji, I place my pending order, then I have a little pips. I have a little pips. I have a little pips. Even here, even if it's trend line I'm using, point 1, point 2, this will be my area of interest. This will be my area of interest. And my area of interest, I'm seeing a doji. I'm seeing a doji. If I put my pending order here now, then I'm going to catch some pips. And of course, if I wait for this candle to form, I'm not enter again because my stop loss is not too wide. I don't take such trade. I don't, even if I take such trade, I don't give such signals in the public. Okay, that will be like 34 pips. But then even if you take it and put your stop loss here, even if there's this pullback, it come back down again. And then look at it again. On the same zone, I'm having a long-legged doji here. I'm having a gravestone doji here. I'm having a gravestone doji here. And the price is still going down. Price still going down. So don't forget. Some of you are missing the assignment. As I'm coming back to repeat this again. Don't forget that the zone, my area of interest, where my down zone, my down zone. You see, you can just put it like this. You just put this is my down zone. This is my down zone. Here again, my down zone. This I'm just following up what is happening on this support that's become resistant here, that's become resistant here. So I have my Greystone doji here, I have my long-legged doji here. They are all on the zone I've been looking for. Now let's see if I have another example in the past. Now let's look at it again. Okay, so you can see most of this thing is very beautiful to draw. If you don't worry, I've not taught you how to draw how how to draw support and resistance very, very well. Don't worry. I've not really treated it. I've only done trend line. So, but on support and resistance, I'm having this zone. Price got to this place, bounce back, came back here again, bounce back, came back here again. Now, it's just resistance, it became support here, bounce back up, came back there in the future, okay, became a support again, bounce back up. And then here again, touching it, almost touching it, bounce back up. So in the future, I'm just drawing it. Will I have a rejection in this place? And my rejection is telling me um a so this one look like a spinning top actually. I think it look like a spinning touch, like almost like a long-legged doji. Then the price moved to the upside, So if I put my pending order here now to take a buy, I'll be having how many pips? 49 pips, and that's remarkable. That is remarkable. And so the point we are trying to raise here, what I'm trying to emphasize again, is that it is not just about the doji, it's about the down zones. You know, it's about the down zones. It's about my area of interest. It's about where I'm expecting something to happen, where I'm expecting a reaction in the market, where I'm expecting a reaction in the market. That is my area of interest. That's what I'm looking for. That's what I'm looking for. You can see. You can see. You can see now. If this is my point one, if this is my point one, and I have it point two, you see, and I'm having it like this is my point two. My point two has a doji, but that's not my interest because you know I need two lines to get two two peaks to get my line. So at my third, this is now my area of interest. This is my area of interest. This is my down zone. This is my down zone. Okay, this is my down zone. You get the point now? And so in my down zone, I'm having this doji. I'm having this doji. I'm having this doji here. He's telling me that look, oh, this pullback is getting exhausted. It's only confirming to me that price is not going to go up because these guys are tired. These guys are tired at this zone. They are tired. So what I do is wait for this candle or this candle to form, let this candle to form, or set my sell stop here on this price and then see by how much the price went. Price went there by 165 pips, and that is remarkable. That is remarkable. So it can also happen, see here too, see here too, see here too. This is my point one. Very, very important. This is my point one. Then I have my point two. Then see my area of interest. See my area of interest. Did you see? I see my that's my that's my dawn zone. I like it. Boy. This is my dawn zone. Did you see that? That's my dawn zone. And my dawn zone, because the third point, the third touch is where I'm expected to take action. So I just need two peaks, okay, to draw my trend line. So I draw it from here to here. I'm waiting for it in the future. Now the future comes now, and lo and behold, I'm seeing this doji. I'm seeing this doji. That looks like how can we liken it now? Is it long-legged? I think it's been long-legged, or let's just call it long-legged. But what is important about doji is that the opening price and closing price are the same or almost the same. The same. So here now, at my down zone, I'm looking for a sell. What I do is I wait for this candle to close and take my sell, or I put my pending order below the tail of this, and boom. How many pips is that? 104 pips. 104 pips. That's remarkable. Boy, I'm enjoying myself here. Oh boy. I look at the same thing. I think the same thing is still happening in the future. The same thing is still happening in the future. The same thing is happening in the future. Same is happening in the future. In the future here too, I'm seeing this is a typical long-legged doji. Typical long-legged doji. And boom, the price went down. If I put my sell stop below that tail of that tail and I say sell, by how many pips? 44 pips. 44 to 45 pips. And just like that. So that's what I mean by the area of interest and the likes. And now let's look at where um let's get it from here also. Let's get from here. This is my point one. This is my point one. This is my point one here. You know, this is my point one. Then I have my point two. Okay, then I have my third point here. That looks like gravestone doji, but it's actually a shooting star. Don't worry. But let's just assume, let's assume, let's assume it's actually a shooting star. I love shooting star in my life. My goodness. That candle has made me a lot of money. So we have the down zone there. But the third spot, point one, point two, I'm having a shooting star here, which is let's assume it's a gravestone doji. Okay, so it's going down. My goodness. Pew! By how many pips? By how many pips? So let's say I waited for this candle to close on 1 hour time frame and it came down and I'm having 46 pips. That's actually now another thing I wanted to show you is the test. Now look at it. As this is coming down, coming down again, coming down again. Now there's a breakout. This is not trend line breakout and retest now. As it's breaking out like this. It came to pull back, and then I'm seeing a doji. This doji is telling me that it's just a pullback and retest. Okay, it's breakout and retest, breakout and retest. The trend line is broken out here. Okay, this trend line is still holding. It's breaking out here, and then I'm having a doji here that tells me, okay, just the pullback, the price is going to go to the upside. So what I do is, if I'm here now, I set my pending order above that candle and allow it to flow, and see how many pips. There were 73 pips, 73 pips. And that is just what I intend to show you. Look at it from here again. Point one, point two, Point 3, I'm having a doji. Point 1, point 2. Point 2 is also a doji, but I'm not interested in the point 2 doji because I need it to use it to draw. Point 2 is a doji. Then I have then look at the Don zone. The Don zone is having a doji. The Don zone is having a doji. The Don zone is having a doji. Okay, you can see this doji here. It looks like a common doji, and then price went to the upside. Price went to the upside. Pip. Price just look at it. How many pips?